Today is Friday, January 22nd. We're going to take a look at two stocks in the Dow 30. They used to be blue chips. Now I guess you can call them black and blue chips. Take a look at IBM and American Express today. Simple chart up here now. Daily chart of IBM with a 50-day moving average and with a 14-bar RSI in the middle and volume below that. Really nothing fancy here. Declining trend. You can even draw some lines on it if you like for the current short-term decline. But you know, it's pretty obvious what's going on. A break of the support here on a gap. Now the question is that a continuation gap or is that an exhaustion gap? And right now, if we zoom in a little bit, chances are it's not a continuation gap because of 2 days or at least a day and a half of gains after the gap. The gap isn't closed. I'm not in the school that says it has to be closed. But I think if this thing were going to continue to run lower, it really would have made its move already. That said, it doesn't mean it's a buy signal either, because the stock is just in a declining trend. Big volume on the gap, could be exhaustion, but look at this, not even oversold officially according to the RSI. And if we look at other indicators, maybe we could find one that does say oversold. And then if we go into the weekly format, weekly time frame, let's get rid of that. And you can see what's going on here. Now, is there a support here? Is this a support level close to where it is now? So let's just draw a line, eyeballing support, the top of this ridge here, right through the center here. And if we go back in time, you can see it also hits way back in 1999. So I'd say that this is a pretty good support level. And now let's zoom in. Let's zoom in on that. And in the weekly time frame, I would say it is on support, even though it penetrated it earlier in the week. So I would say IBM is on support, and that might have been an exhaustion gap. So to me, it looks like the worst is over for IBM. Again, that's not a buy signal, but perhaps if you have other research that says the company is not going to get any worse, and this could be a good long-term buy. All right, let's switch gears. We're going to move over to American Express. Type in the symbol. This is Technician software, by the way. You can see American Express is also in decline. It seems to be maybe 2 days behind IBM. IBM gapped down 2 days ago, and here we have American Express getting crushed today. Look at this volume. That could be exhaustion as well, rather than a continuation gap. It is oversold here, according to this 14-bar RSI. So is there anything else we can find out in the weekly chart? Okay, here we go. Now, is there any support we can find? Here, perhaps here. Let's scroll back in time and look at that. Put a horizontal line about there. That looks like a good level. It hits the highs here in 07. Let's go back in time for more. Not really. So highs in 07, this resistance or congestion zone in 2012. So as you can see, American Express has busted through that. Now it is oversold in the weekly time frame. IBM was not. So this could be exhaustion as well, even though the support has broken. So I wouldn't be so interested in selling this thing aggressively right now. But again, you know, just because the bear market is over or likely over doesn't mean it's time to buy. Need to do other research, maybe look at its peers, see what's doing in the sector, see what's doing in the market. But here we have it. We have two battered and bruised blue chips that could be exhausted to the downside.